folks. Good evening. It's a Wednesday today, and tomorrow we have the RBI policy meeting, uh, a policy decision rather. But today's session is not going to be about RBI or the Bank Nifty or even the Nifty or the expiry tomorrow. Today, I'm just going to talk about ITC and why ITC. So let's start looking into the screens, the charts. So yeah, this is the daily chart of ITC. And as you can see, after yesterday's red candle, today was a green candle, which is engulfing the entire body of the previous day's red candle. This formation, this two candle formation is called a bullish engulfing pattern. Bullish because uh, the previous the previous candles or the previous trend for ITC has been a downtrend, and so at the end, generally a bullish engulfing pattern signals a reversal in trend. So basically, what it means is that from here on, we might see some bullish activity in ITC going ahead over the next few days at least. Um, so what happened today? If I move into the weekly charts, so before I actually go on, a few days back when the demerger happened, I had shared my views on ITC. Like I had mentioned that if 455 is a level to watch, is a critical level to watch. Why 455? Because this is the weekly pivot support. ITC was falling from these levels, and this 455 level in the weekly charts was a pivot support. So this level is what I was saying for short-term traders. This is a critical level to watch. ITC actually moved below these levels, and but towards the end of the day, it actually bounced back and helping Nifty recover above 19,600 levels. So that particular so here is also a daily pivot support, which is at 444 levels. So all these levels are critical. I mean, they acted as a good support for ITC, and so which helped in the ITC crossing above the previous day high and closing above that, and creating this bullish engulfing pattern. So how to use this, or rather how to trade this? So generally, I'm an options trader on large caps. Even though I have ITC from a disclosure perspective, I have ITC in my long-term portfolio, and I've been holding it for more than a couple of years now. So, and this video is not a recommendation or anything on what kind of trade you are going to take and all that. It is just how you can, I mean, it's just a small, you can say, education about a bullish engulfing pattern and how I'm using this to generate a trade using option strategies. Again, let me tell you that I do not buy or sell naked options. I rely on option strategies so that my positions are hedged, and I generally hold these strategies over a longer period of time. Like these are positional, these are not generally intraday strategies. So positional would mean like at least 2 to 3 weeks or even till end of expiry. So this is the trade that I've thought about. So there are three legs to the trade. So currently ITC is at 458, 458.35. So what I'm doing is I intend to buy this 460 call option tomorrow, and one lot, and sell the 475 call option and the 480 call option to um, to basically minimize my outgo, my debit. So this is how the payoff diagram looks like. If ITC doesn't move up, or it falls from these levels, my loss on the downside is limited to just 2,800 rupees, which is 1.6 points. Basically, one lot in ITC is 1600, yes. And so basically it's not even 2 points of the overall trade that I can lose if ITC actually turns out to be bearish and the trade doesn't go in our favor and all that. But what happens if it starts going up? My break even on the upside is at 493. So is 493 a good level to uh, so for a break even for this kind of a trade? So let's go back to the charts. So if I see the charts again, just a sec. Yeah, now it's better. So if I see the charts again, 493 is this level, which is a pivot resistance. So what ITC has to do, ITC has to move up, cross the CPR zone. This again would provide some resistance to ITC, and it has to cross above these levels and then again face this face resistance at these 493 levels. So I have a lot of time before 493 is breached, right? So basically on the upside, until and unless I see 480 levels getting breached, I will actually not do anything on the trade. I'll just keep this trade running and see where it goes. So only if 485 480 485 is breached, then only I'll start to do some adjustments to this trade. Otherwise I'll just hold on to this trade and um, see what how much I can make. So again, as you can see, on the downside, I make a very minimal loss. On the upside, my loss starts only above 493. So again, this is a strategy which I generally use for most large cap stocks which are mildly bullish in nature. I'm not considering ITC to be this particular reversal to be hugely bullish, because currently there are not too many triggers, because the demerger news is out. Yeah, there is a meeting on the 14th of August, of course, where the management is probably going to discuss or reveal more about the demerger. But let's see what happens. So I would still think that I would have some time to make adjustments to this trade uh, if warranted. But again, let me tell you, this session is just for a small educational purpose, and to let you know how I take trades using options. This is one of the strategies that I generally use in case of mildly bullish views on stocks. So with that, I'll end my session today, and have a good trading day tomorrow. Thank you. Bye bye.